Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So in general, you can see that the performance that we have discussed recently stands on the way. Market even is moving lower to close the gap that we discussed. This gap is not closed totally, but well, market is working on it. So the reasons for that is pretty simple. So if you take a look at the dynamic of the United States 10-year bond, you will see what the performance actually. So market has jumped, the yield has jumped to 4.27% in one session. If you take a look at the different chart, you could see the gap here to the upside. It was the closing, holidays, Labor Day, and right in opening, you could see the jump for significant distance. So this is daily chart. And what we are talking about, the rising of the 10-year yield, it's now is, well, getting a reality. So our expectation is, we're waiting for this yield around 5% in perspective of the 1 year. So maybe even sooner. And that's of course support the downside dynamic on the gold market. That might explain why gold actually was able not to just complete 1926 target that we discussed, but it's moving even lower. And the performance of the interest rates right now keep the open for the further downward action, but it is a bit tricky moment. And here is why. So if we'll take a look at the hourly chart, sorry, the euro currency. So if we'll take a look at the hourly chart that we were trading and are trading still, here we could suggest a few moments. First of all, OP has been passed, right? So by the logic of this performance of the hand and shorts, market should try to keep going to the XOP. It's 1916. But on the way to the downside, we have first of all the gap. Second, confidence support, 1922, 1926. Besides, as you could see that the CD leg is relatively flat. We do not see any thrusting very fast downside action. And by this reason, I'm not excluding the chance that market could start to bounce up once the gap would be closed. So once we get approximately 1921 right there, it could start forming the pullback. From that standpoint, think about protecting your profit. So if you're taking short position, here was just by the way minor reaction on the OP, as you can see here, and market just keep going lower. Think what to do with your position. If you'd like to keep it for XOP, no problem, but think what you will do with your accumulated result right now. It makes sense. Usually you could follow the few options. Tight stops, grab some profit at the ultimate point for around 1921. You could close, for example, 40%, 50%, maybe even 70% of your position, grab the result. If market starts bouncing, you could sell once again. If you still would like to possess yourself with the downside continuation to the XOP, tight stop on the rest of your position. And you could stand aimed on the XOP as well. But do something, because this is, as you can see, really tricky area where a lot of surprises might be. So for how long the 10-year yield will keep growing with today's session is difficult to say. So it might be some stagnation or maybe even starting the reversal to close the gap that had been formed due to the Labor Day. This also might happen. And as a result, gold also could start bouncing. The same story on the euro currency. As we discussed in the video, euro currently stands at the oversold. Yes, it could flirt around 106.90, 107, but potentially technically this is the background for some technical response, technical upside bounce. And the same story we could get on the gold. So that's the moment that you will have to consider and think about what to do today. Definitely, this is not the best point for taking new short position. The one thing that you also could consider, for example, on the follow time frame chart on the gold, you could see that market here has that thrust. Yes, it is not really very strong, but it has minimum requirement number of candles to the downside. But it showed Napoli determination of the thrusting action. We probably could in other circumstances just do not consider it. But the advantage of this consideration is that for us is just because market stands at the confluence. So on the daily chart we have, on the 4 time frame chart, we have strong confluence support here. And one thing that you could consider, for example, the double repo pattern. If it will be formed, I not call you to trade it. So if it will be formed, you could just get some signal that maybe it may make sense to grab some profit. It's because market could show some retracement somewhere back to 1935 maybe. It easily could happen. So other words speaking, currently, based on the probabilities approach, chances on the pullback here looks better than the chance on just direct downside continuation. And the pullback could start as soon as market will close this gap. So that's what we have in the gold market. In general, situation looks really great. So we're coming to the target. Market is moving down. Everything is great, but just keep in mind this potential tricky moment that could be formed within the few hours.